As we turn our focus now to Malawi's energy regulator, they have announced a sharp increase in fuel prices for the second time in 4 months, citing the need to avert fuel shortages and also to conserve scarce foreign exchange. Petrol prices have risen by nearly 42%, while diesel has gone up by about 41%. This is according to the Malawi Energy Regulatory Authority, or MERA. The move comes as President Peter Mutharika's administration seeks to stabilise the economy, negotiate a new support programme with the International Monetary Fund, restructure public debt and rebuild dwindling foreign reserves. For more on this, we joined on the line by the President of Economics Association of Malawi, Dr. Bertha Bangara Chikadza. A very good afternoon to you, Doctor. Good to have you with us. Perhaps let's start off with your view of what your overall assessment of this latest fuel price hike is. And do you believe that it was unavoidable under the current economic conditions that Malawi finds itself in? Welcome.
Good afternoon. Yes, so the price hike, which has just been effected today, it was unavoidable. I should start with that. Looking at where we're coming from, the last regime was not effecting any price changes in the fuel prices. So we could see even in all the energy prices, in terms of electricity, in terms of even water tariffs, nothing was being affected. So we could see that we are an importer. We import petrol, diesel, and all the petroleum products, but prices were not changing, and we knew it was just a matter of time. So they were cushioning the people. They were trying to contain the prices, but things were not okay. That's why we were seeing even an import bill of fuel going all the way to sometimes $70 million a month. And we even saw people smuggling fuel from Malawi to Zambia, to Mozambique, and sometimes to Tanzania, meaning that our fuel was even being priced actually lower than our neighboring countries. So it was something that we saw it coming, only that maybe we didn't know to what extent. But it was something that we were expecting.
Right. So the government says that this move is part of efforts to stabilize Malawi's economy, which is really fragile at the moment. How feasible is this approach, and can fuel price adjustments meaningfully contribute to macroeconomic stability?
So basically, I would answer it in two ways, because on the one part, we are seeing the government trying its best to acknowledge the problems that were there, and also bringing in efforts to stabilize the fuel supply, the problem which was there because we were actually going on fuel queues, sleeping on fuel stations just to get that product. And we also saw Malawians even buying the same product on the apparel market at prices maybe 3 times as much as what we are seeing now. But Malawians were willing to pay that just to get the commodity. However, we are seeing now, on the other part, most of the Malawians are poor and they use public transport. And this public transport are actually private owned, meaning that any change in the fuel prices will also be passed on to consumers. And we are at a point where the Ministry of Finance or the government has just revised even taxes. And so all these are falling on Malawians. So much as the government is indeed trying to stabilize the economy, trying to price most of the commodities right, it's high time, I think, it also looks at the impact, because all these things are coming at the same time, and Malawians will really feel the pinch, because apart from prices of fuel, we are also seeing energy prices in terms of electricity also going up. And I think it will not end there. We might also see water tariffs also changing. So it's an ongoing thing.
Certainly some intense economic pressure coming out of Malawi. We thank you very much for your insight this afternoon, ma'am.
Thank you so much.
Thank you. That was the President of Economics Association of Malawi, Dr. Bertha Bangara Chikadza.